What's up, everybody? We are back for our Tuesday stream. I'm going to start out tonight going over Bitcoin. Obviously, that's going to be an interesting one to take a look at. We have had some price action to the downside. Let me share my screen here. All right, so the way we've been looking at Bitcoin, after this big correction we had here is, we did find this support originally down by about 30,000. We've been working our way up. We kind of had this ascending triangle forming, symmetrical triangle, however you want to draw it. I like the ascending triangle because it is historical resistance dating back to January. But we did break to the bottom of that, and I've been looking on lower time frames to kind of get a better idea of what's going on. I'm on the 2-hour right now, and we did hit this support we found back here on May 23rd at about 31, about 31 even almost. And we did get a nice relief rally off of that. But I'm not really making any decisions when it comes to Bitcoin at this point, because this could just be a relief rally where we could end up testing, even just testing this support once again, making a higher low. I mean, we are still, if you're looking at the bigger time frames here, we've been looking at this deep crab harmonic on the daily chart. And off of that PCZ, as long as we don't fall underneath that, that's still valid. Ideally, you want to just keep seeing higher lows until we start to make higher highs or fall out of that support zone, which at this point, seeing this price action, it's not off the table. I don't think it's going to happen. You got a lot of people throwing out, this resistance, or this old resistance down here. I think it was about, I've been hearing 24. Some people think we're going to come back and test the all-time highs from 2017 down by 20,000. I don't think that's going to happen. It's never happened in the history of Bitcoin. Not that history has to repeat itself, but it's just never happened in the history of Bitcoin. We've never retested all-time highs like that. I think this is more or less going to be a bear trap. And if we were looking at the typical structure of Wyckoff distribution, that's what you're going to see. I think this, when we were hovering in the 42,000 zone above the old resistance here in January, I think that was the bull trap. And that's usually what happens after the initial dump on Wyckoff distribution. You'll get a bull trap, you'll get some consolidation, and then you end up getting a bear trap. You knock out the bulls, anyone on leverage, and then you knock out the bears, the people who are trying to short this asset down to them lower levels. And you don't really have an edge at this point, but I do think eventually that's what's going to happen. I do think we're still looking at a break to the upside as long as we keep above that, just about $30,000 zone where we hit May 19th. And it's kind of just a waiting game at this point. And, that's how I'm playing the entire crypto market, because everything does depend on Bitcoin. Even if it's going sideways, a little bit up, consolidation, the rest of the crypto market usually does pretty good. But if Bitcoin is dumping to lower levels than we've seen so far, you can expect everything to follow suit. And as a crypto trader, I trade all markets, but as a crypto trader, that does kind of stink, because a lot of the other altcoin charts, we've been making some decent gains, but you had a lot of good looking trades, but it's just nothing I can feel confident in until we get some relief on Bitcoin, and right now it's just not happening. I'll take a look at Clove. Clove's one, we've had a couple trade setups. I posted a few of them on my Twitter dating back a while now. Not many people held through the action. But why is BTC better than ETH? Why not sell BTC and buy ETH? I hold both. And when you compare Bitcoin to Ethereum, it's an odd comparison. I mean, as far as an asset for growth, if that's all you're thinking about, I'll tell you, let's hop over to the ETH chart, which I got more confidence in the ETH chart than I do with the Bitcoin chart. But again, ETH is still good inside this ascending triangle we've been looking at. I mean, we were looking at it a little bit tighter before. As long as ETH continues off this double bottom we got here today on the 4-hour chart to the upside, it's still healthy. We're still making higher lows. But as far as comparing the two assets fundamentally, I like to look at Bitcoin's more, the store of value, digital gold, however you want to look at it. And ETH is more of, if Bitcoin's gold, you could say ETH is the internet, right? It's a platform for creators. It's a platform for apps, and it's just a different thing altogether. But as far as if you're talking, if you're talking which one's the better asset for growth, just from a trader's standpoint, I mean, the ETH chart looks better at the moment. But you still got to keep in mind that Bitcoin is going to draw down the market. If Bitcoin does end up testing lower lows, you're going to see ETH follow. It might not get as hard as Bitcoin does or other assets because of the fundamental nature of ETH, but it just happens. That's part of the crypto market. This isn't a trading platform. This is just Trading View. This is what I use for charts. For trading platforms, I use a couple different exchanges. But yeah, Trading View is also available inside. If any of you guys use Benzinga Pro, they have Trading View charts. It's the same thing. You got all the same features and everything too. But another one I want to take a look at, as far as the crypto market goes, I just want to be clear. I mean, right now I'm very risk off. I'm not, I've been dollar cost averaging. That's for crypto. That's a good thing to be doing right now. But you want to have money on the side just in case. If Bitcoin goes down further, you're going to have a better opportunity to buy at the lows for anything across the market. That's just how it goes. CCIV is one we looked at the other day. And I'll look at Clove too, Matt, in a second here. CCIV, I pointed out, I think we were down around the lower 20s. And we've talked about Wyckoff. This is Wyckoff reaccumulation. This is, after this massive run up we had in February, we came back down, and slowly but surely we retested this old resistance here from January at about, what is that, about 25. We did come down below it. We hit resistance at 31, and then slowly but surely we've been making this rounding bottom pattern. And that's a sign you want to see, that implies that this asset's being reaccumulated, because every time at this point in this pattern, if you look down here on the RSI, we had some bullish divergence, which implies that this asset was in control. The bears had control, and then when you start to see the reversal, that's when you want to look for the divergence. And if you look on the MACD here, the MACD shows waning negative momentum, but at the same time, if you look up here at the price action, we were making lower lows. So you're making lower lows, but with less positive momentum or negative momentum. And that just implies that the bears are losing control. You're going to start to see that's where that rounding bottom formation comes in. That's, you know, it symbolizes the shift in momentum from a bear market to a bull market. And then back here, about the middle of May, you started making higher lows. And that's what you want to see, because that implies that more traders own this asset. That's an accumulation implication. But we did break this resistance here from April 27th, April 6th. And that is historical too, dating back to the beginning of January. That's one of the places on the way up that we did find resistance at. But we're back above that now. I'm looking, you know, for eventually, I think we're going to come back up here and retest 31. You could see March 1st, March 16th. You can see some correlation here in the same zone, again, on the way up. So if you're looking on the 4-hour chart or the daily chart, you would think above that resistance we were looking at here at 26, there's no other levels that really make any sense. You know, maybe we bounce up and down in between some of these fib levels in between. You know, I do see you kind of got this wick high back here in January and a double bottom March 17th at 28. You know, we might find some resistance there, but I think ultimately 31 is going to be the target. NBAX, I could look at that. It's not one I'm familiar with, but I could take a look. Would have been real nice to see this chart a little bit earlier, but all the same, I'm going to start out on the daily chart here. First thing I like to do when I'm breaking down a chart like this, you know, you want to take a look at some of these historical levels on the daily. You know, that 182 zone is definitely one I think is going to be important, and we are trading above it. Sometimes I like to mark out the wick highs too, which does look like it was respected back here in January as well. You got this candle close, but we're trading above that now. And if we're looking, kind of got this zone at 238 that I would pay attention to personally. If we're looking for a fib retracement off of this, you know, it's not as reliable when you get assets that appreciate so much in such a short amount of time. But ultimately, Fibonacci retracements are always going to be something that traders will use as a way to set targets, as opposed to, especially if you've got confluence between historical levels. So if I was looking at NVAX on the daily chart, I like that 238 on the way up, 228, that zone right there. I'm going to move down to the 4-hour. Yeah, I mean, anything above 189 is good. I mean, that's kind of the zone you want to be above. As far as the oscillators, 4 hours aren't giving you much help. You know, you are overbought on the RSI. The 4-hour MACD is showing positive momentum waning. The daily, you got a little bit of room on the RSI still on the daily. But ideally, you want to get in down here before this giant run up. I wouldn't be surprised if you do get, you know, you got your spring above old resistance. And generally, you're going to want to see a back test. You know, if the 4-hour chart here is showing that this positive momentum is wearing out, or is the positive momentum is waning, your RSI is overbought, You know, I do like that double bottom at 192, but I think that we're probably going to come back down here. You know, especially if we're catching a little bit of resistance at that 200 level. You probably come back down, consolidate a little bit, retest the spring on the daily chart. And then ultimately, you know, if it, as long as you stay above 189 there, I think your next target's going to be 228. I don't know if there's any catalyst for the price action on that one, but I like it above 189. Coinbase. See, this one's a tough asset to look at for a TA, because there's so little data on it. It's still pretty young, but on the 4-hour chart, you're looking at, as long as we don't test any lower levels, you kind of got a double bottom, a possible double bottom happening here, and your negative momentum is waning. Your RSI on the 4-hour chart here, you are oversold. I was looking at this one earlier too, because I was kind of thinking the same thing. I'm moving to the 2-hour chart here, and really the level I would keep an eye on is 217. If you fall underneath 217 on Coinbase here, you're probably going to go lower. You got this double bottom back here, May 19th. I like that. And if you look at this wick we got earlier today, you know, you hit that same level and you got this nice move up, a nice long wick back up to about 220 here. I think that's the level we're looking at. Yeah, about 220. So I would keep an eye on 217 personally. If you fell underneath that, you could. I'm not much of a short seller myself, but if I was going to short it under 217, I'd keep an eye on 208. You know, maybe 213. 208 is probably where you're going to be headed. Again, I'm not a short seller. I'm definitely not giving you advice on that. But if we were going by the 4-hour chart here on coin, like I said, I would keep an eye on the fact your negative momentum's waning, you're overbought or you're oversold on the RSI, and if you look, you could definitely be developing bullish divergence at this zone. That is above 217, but ultimately right where we're at appears to be, you know, if we do make a reversal here, you got a nice double bottom on the 4-hour chart, and I do like that. Daily doesn't give you any help on this one. As you can see on this is what I'm talking about, the lack of data. On the MACD, on the daily chart, you're just showing that the positive momentum is waning. I wouldn't really put too much on that. I like the 4-hour though, as long as it doesn't go down any further. Wish, I could do Wish, and if I miss any of you guys, well, I like Wish, but I like it a lot better down here. I'm just assuming that this is one of these Reddit or you know, popular stocks with a short interest here, just because of this ridiculous price action. Unless there was some sort of news-driven catalyst, but the 4-hour, if you break that 1539 zone on the 4-hour chart, I mean, that would be considered a breakout. But the problem is, until you get confirmation above that, and I'm just going at this from a technical analysis standpoint. I don't know what's going on with the stock, if it's one of the Reddit stocks, but normally what you'd want to see is you'd want to break above that, you'd want to come back down, and you want to test it as support. What was once resistance is now support, but that's where you're at. So if this is a stock you were looking to take a position in, you got to wait for two things, in my opinion. I would either wait for it to come back down and correct underneath 1539, but if it blasts through 1539, you know, that's going to be your new support. So if it fell back underneath it, that would be a bad sign. That would be where I got out. But personally, if it was me, I would wait to break that zone, come back down, back test it. You know, looking at the RSI on the 4 hour, it's super overbought. On the daily, you got room on the RSI on the daily, but there's no edge for a trade here, because you're in the middle of this massive zone at resistance. So that could end bad until you get confirmation above that zone as support. But if, say it does break that zone, if you do break above that zone at 1539 on the daily chart, I'd definitely keep an eye on 1758. $20, just about even at 20. And then again up here at 23.90. If this is an asset that's being driven by, you know, some of these sites like Reddit, it could get wild. And the thing you want to take into consideration when you're investing in assets like that have these, you know, outrageous amounts of volume coming in, this is what people are going to look for. If I'm setting a limit order to get out of this asset, this is what I'm going to be looking at. I'm going to be looking at historical data, and for Wish, 1750, 20, 23, 90. That would be where I'd look at. And I bet you anything, if we run a fib retracement here, yeah, you got confluence. Your 1618 would be $20. Your 100% measured move would be 23, and obviously your full retrace, you're already at that. So again, if you break that, you're probably going to go up to some of these other levels, but you're going to want confirmation that that zone is no longer resistance, because it's going to be a long way down if you don't. Eric, as far as Safe Moon, I'm not familiar with HODL, and honestly, I'm not real familiar with Safe Moon. It's just not something that I invest in. You know, it just mainly because, you know, I know what's going on with stuff like that. It's really risky. You could make a lot of money if you do it right. But I try to stick to the charts, and you know, that stuff doesn't really fall into my trading strategy. As far as Roots goes, Dakota, I don't follow short interest much. I'm not sure about that one. I wish I could help there. OUST, is that a stock? Ruel. I'm sorry if I botched your name there. Is OUST a stock? Is that a crypto? I just want to make sure I'm not looking at the wrong one. I see you there. Oof. This was real nice down here. I'm just going to start out on the daily chart here. If you were looking for fib retracement levels on this one, historically this was a big one. That $11 mark was definitely a good one. You got a double top over here in January, pretty much confluent with your 618 at 1391. It looks like this one's been running up. You got the RSI on the daily overbought. So I would expect, just looking at the daily, you're probably going to come back down and retest this broken resistance here. If we were looking at, you know, that's probably going to be your zone between 1380 and 1415. You probably come back down and retest that. If you retest that as support, you're probably going to look at some of these levels, I don't know, I would say probably 1538 looks like a good one. You know, you got initially, you got the wick high, you got a wick down, what was once resistance, it's now support. Once again, in February, you did find some resistance there, and again and again. So 1538, that's probably, you know, an area I would keep an eye on. And then again, up at 619, you know, I would just work my way up. If you do break above, I mean, if you do hold this 1415 zone, that's probably where you're going. Yeah, actually, I do like, yeah, 1538, 1584, somewhere in that zone. You know, this was obviously a volatile run back here in December. You don't really have a lot of information at those levels, so that's probably where I would start. But you do want to see this confirmed as support here, because you could easily just as easily fall back down to this 1147 zone to back test that. You didn't get that on the daily. Arguable on the 4-hour chart. So above 450, above, you could even lower. Above 1350, I like it. If you fall underneath 1350, you're going right back down to 1147. So I would keep that in mind for that one. Is it time to short Tesla? Tesla, the shorts are in the building. Here we go. I like Tesla for now, man. I got to tell you, we talked about this one the other day, and this is how I'm looking at it. You know, you got this bullish harmonic here, bullish shark after this retrace, which is, that's where you want to see something like this. You want that awful sell-off, the momentum shifting structure. You come back down at your D point. That's where this pattern completes. You want to see a reaction, and then you want to see a confirmation low. And on Tesla, we got that so far. It does look like, it almost looks like we got some resistance. Looking historically here on Tesla, it's also the 382 retracement at about 624. We're still getting resistance. As far as shorting it, for the bad guys, if you were trying to short this asset, I wouldn't touch a short until you get back underneath 573 for Tesla. If you fall under 573, I would start to be worried, because that would invalidate the fact that you're making higher lows. You got your spring, you got your back test of the spring, and from this point, you're going to want to continue to make higher lows. At least, even if you're getting resistance here at 624, as long as you keep making higher lows, eventually you're going to break above that. On the 4-hour chart, you do have your negative momentum waning. You're kind of neutral on the RSI. You got positive momentum building on the daily, but you're not really, you know, that's nothing that I would really write home about for Tesla. I'm not sure if that's a stock phrase. I'm just, but you know, if you're going off these two lows on this harmonic, you did have bullish convergence, implying a continuation up. And the daily chart, it's not thrilling, but the thing I do want to keep an eye on, you got this supply line coming down off the back end of this harmonic here, and you tried to break above it today, or yesterday, I think, right? Yesterday you tried to break above it and you got rejected, so you are coming back down underneath that supply line, but I wouldn't touch it as a short seller until you break this support zone in the green there. Please drop. I want to buy more. Clove, make money, share it. SENS. I think that's another one of the Reddit ones, if I remember correct. Chart beautiful for SENS, but I mean, it was a lot better down here. But this is the same thing that we've been seeing on a lot of the Reddit stocks that had that massive pump at the end of January, right? We talked about it a few times. It's Wyckoff accumulation. Again, this is the composite operator telling you that he is collecting this asset. As this February 17th high got ran down, bears are selling, shorts are coming in. You know, you keep making these lower lows, and then surprise, you've got this XABCD that showed up beginning of March. And I've said it before, these are bullish harmonics are a momentum shifting structure. They appear, generally speaking, or at least the context you want to see them in, they appear after a sell-off at a deep retrace, right? If we were looking at the fib retracement on this one, oops. I hear somebody.
Oh, hey, Miss. I think that's me. I don't know if you saw this, but we got a super chat here asking to look at DOGECOIN.
DOGECOIN I could do. I did not see that, Mike. I'm sorry about that. Yeah, let me take a look at Doge real quick. That's one I've aside from the charts, I normally stick to chart investing, but Doge is one I like for some other reasons. I'd be happy to look at that one, Mike. Thanks for the super chat. So as far as SENS goes, it's the same thing that we saw on AMC right now, or before the the big move up. It's the same thing we see on BlackBerry and all the other stocks that really got that attention from Reddit and the short interest stocks. Ideally, this is where you want to get in, right? We got that momentum shifting structure. You did have bullish divergence on the MACD and on the RSI. And this is where smart money would want to get in. This is where the composite operator is accumulating before marking that price up. That doesn't mean it's over for this stock, but I do want to see it stay above 318 because that would have been a target for this harmonic here at 318. And on a 4-hour chart, again, this is something you might see it come back down and back test resistance as support before traders push the asset higher. They want to make sure that this is now support. And if I was looking for targets on the way up, just going off historical data, it's not really confluent with any fib projections, but I do like this. Kind of got this choppy zone right here. You had some wick highs back here in February too. That would probably be where I would look. If you want to go on the wick, you could do that too. But I like these closing candles right here. And if you look at the data, as soon as you came back down to this support, straight up, straight down. So you would think once you get support at 318, you're probably going straight up. It's not trading advice, not a prediction, but historically, that's kind of what happened. You can even look at that $4 mark. That's kind of a psychological resistance too that traders might set up to sell. Yeah, the daily is so choppy just because of the volatility. It doesn't really help you out a lot with levels. But you got this wick high at 390. That closing we showed, we talked about at 398, 434, and then if you were going to go any higher than that, up here around 445 at the 1618. That's what I would look for. But again, if you break back below 318, you're probably in trouble. You could come all the way back down here, to the low twos or 275 to back test that. Mike, we are going to do DOGECOIN, and this is one I've been following for the long haul. Shoot, we've been trading this one all the way back to January. For argument's sake, just looking at the daily real quick, you could argue you got this head and shoulders thing going on. If you were looking at it like this, not really the first way I would look at it, but we'll go through some of these levels here we got. On Doge, your main levels, I would look at, off of this last run in April, you got this double bottom at 28 that so far you're holding up. We did retrace below that a little bit on the sell-off, but the same thing we were just talking about with the bullish harmonics coming into play after the sell-off, right? You got the sell-off, you got the momentum shifting structure here, and you're making lower lows on the price, right? And then you come down to the MACD, and between those two zones, you've got lower levels of negative momentum or higher levels. You have less negative momentum on the asset, which would imply bullish divergence. The bears have lost control back here May 23rd. Even with this sell-off, you're still making higher lows on this asset. So that would imply accumulation. Even with these sell-offs, you're still making lower lows or higher lows, I'm sorry. And if we look down here, I'm on the 4-hour chart, and I'm looking at it like this. Lower lows on the price, and then you've got down here negative momentum waning. So I think Doge is trying to find a bottom here. A lot of this price action to the downside is, you got to look at it with any crypto in the market. When Bitcoin's when the price is dropping on Bitcoin, when you're going through a correction, the US dollar price is going to be going down because these assets are valued against Bitcoin. And if Bitcoin's going down, the market's going down. And you could look at Doge. I haven't recently, but you could look at it against BTC. That might be a better way to gauge how it's performing. But as long as for Doge, I would look at it like this. Right now, you got this support at 31 cents. You got a double bottom potentially, as long as it holds up. I like it because not only do you have a double bottom, but you've got bullish divergence. Your RSI down here, you had bullish divergence on the RSI. You are breaking above the RSI moving average, and it was oversold while you're putting in that double bottom. So that's a big thing. And you've confirmed support twice. I would be looking, short term on this asset. I'd probably keep an eye on 37 again. 36, 37. You've got these highs back here, April 16th. And that's also the 618 retrace on this asset. And if you look at historical price action from where we're at, you got straight up. And then once you broke that support that we formed, it was straight back down. So if we do make a move to the upside, historically, you're going to go straight back up to 37. And if Bitcoin starts to make a move up, which it has started to get a little bit of positive price action today after the move down, that's where you're going. And above that, probably looking back up at that 40 cent zone once again. So if you're trading it short term, that's what I would look for. If we were to move that up, I mean, on the high side, you might 39.40 for now until you break that. That's kind of your zone between 31 and 41. And above that, I think we did have a trade set up on Doge. If it broke, it's Doge has got these levels about 10 cents apart. You know, if it after 41, you're probably going up here to 51. You got a lot of you got a lot of congestion up in that zone. Historically, that's probably where you're headed. But you want to see Bitcoin start to catch some bids. You want to see some positive price action to really rely on any of these. Long term, I think Doge is good. I'm on the Elon fanboy train. When it comes to Doge, I do think he is going to develop this asset into something. I mean, it's like he said, it's inevitable at this point. I think he's got some stuff going on with the SpaceX program, you know, with his Mars stuff. I think there's a lot to come out of this asset, and everybody it's been a joke its entire life, but I think, you know, he's talking to Vitalik Buterin about making some sort of ETH Doge collaboration. I don't think he would waste this much time pumping up a DOGECOIN if he didn't have something else going on behind it. It is actually a pretty good payment processing platform. Much information, such wow. Yes. But again, that's speculation. But again, you got to think this guy has a busy enough life. I don't think he's going to put the effort into all this stuff surrounding Doge without a plan. And I think this plan has been going on for a long time. He knows payments. He knows the processing. It's just a thought, though. I wouldn't really trade based on that. Yeah, let's get some likes on here. Let's get the Al Gore's rhythm going here. Just for now. Yeah, Clove, I'll bring that one up. We did post a chart about Clove. I think it was on this stream. I think we talked about this one back here at $8.13. This one's on my Twitter too. If you guys don't follow me, I'm Trade Nomadic on Twitter. That is where a lot of these charts go as I'm posting them. But Clove, we had this Fibonacci retracement level here, going off historical data, the same thing. That's where these levels come from. And like I said, even when you have a stock, you know, it's being promoted on Wall Street Bets or Short Squeeze, whatever hyped up stock you're looking at, that's where these levels are going to come from. Whether it's Fibonacci retracements, Clove, yeah, it doesn't have any price data above 1755 prior to this. But if you look at these price levels, man, you went right past the 2618, 1618, 3618. I'm not going to call that out as a projection, but if we were going, even if I moved up, you know, I think that's what this target was. You know, I'd be willing to bet. Well, I wouldn't be willing to bet, but you see how accurately running this fib retracement off of the high over here and the bottom here. Look how accurately that called out that peak right there on Clove. It's not because technical analysis is magic. It's because traders use levels like that or historical data, if there was some on this asset, to set targets. You know, once you get into price discovery above historical all-time highs or historical resistance, there's no data to support. You know, if you were setting up a limit order to get out of the stock, there's no data. So that's where Fibonacci levels, especially on retracements, come in handy, because you've got, these are probabilities. If you break into price discovery above all-time highs and you don't have any data to set up sell orders or, targets on the upside, that's what people are going to use. They're going to look at, especially on the daily chart, if you're looking for major targets, that's how you'd want to set up your targets. So if you were looking for this asset to go any higher, I'm not saying I'm not implying that. If you were looking for a target, I think your next level up from there, I'm trying to get these real precise. If you were going off of the fib retracements alone, 2850 would be a likely target. And it's not a prediction. It's just, these are levels that might end up being important. Higher than that, 35, 36 would probably make sense. Well, it wouldn't make sense. You get my picture. But we're on the daily chart on Clove, and you are extremely overbought. There's nothing. This volume is insane. It could keep going, but if it does come back down to retrace on Clove, I would be looking at this historical data back here at about $17. When you might come back down, you might test what was once resistance as support before attempting to drive this asset up to 28 or 35. If you're looking at the 2272, you got 31 to 33 bucks. But again, stuff like this it's hard to use technical analysis on an asset so volatile. Cardano, Danny, I got you. I like Cardano as a project. Technically, again, you got to just keep in mind Bitcoin is important for this asset to do well near term, right? So just looking at, you got a couple different levels here I like on the daily chart. Obviously, this 150 zone has been respected as resistance, 1, 2, 3, and then support. And we're above it. You kind of got this bullish pin bar forming on the daily. Looking at the volume, your volume's picking up a little bit. It's been coming down a little bit. On the 4-hour chart, oops, I kind of like this reversal here, right? On the 4-hour, you got this nice double bottom, piercing line, reversal above 145. So that would be my bottom for the time being. And as a top, the top of the zone is probably going to be, you could look at it up here, or you could look at it. I personally like 169 is probably where it's headed now. As long as it continues up for the time being, that's the next zone that traders would probably look at to take profits for the upside. You got the reversal off the bottom of the zone at 145. Top of the zone is going to be about 170. And if we're looking at, you got higher low, you sprung, you back tested the spring, and you're moving back up. And then if we look down here at the MACD, you got convergence between these two lows that imply a continuation up. And then if we were looking at, this was almost Class C bullish divergence where the MACD bottoms out while the price is still going up. But all the same, the same message is being painted. You've got your support at 145 and you're moving up. if we were looking for targets above where we're at and above 170 for Cardano, we could. Fib retracements aren't really doing it for me, but if you were going to look at historically, that 618 at 192 is probably going to be an important level, but you do have some congestion to break before you get up that high. You got this double top back here from May 9th that you're going to want to break, and you can see it's been resistance, 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 and you're probably going to need to retest it before breaking that, before going back up to 193. Above that's going to be pretty big. But again, this is something you really got to pay attention to Bitcoin for, because if Bitcoin doesn't want it to happen, it's not going to happen. If Bitcoin does make a move below support where we've been at, it's hard to say that this stuff's going to play out. And it does look good though, compared to some of these other assets, because if you look back here, you're above historical resistance. That's big. That's something that Bitcoin cannot say if we were looking at Bitcoin again. You know, if you compare Bitcoin to the Cardano chart, Cardano is above this part, right? Bitcoin's got this resistance here back from January 9th, and it hasn't broken it yet. And ultimately, before you can be super bullish on Bitcoin, that's what you want to see. Or any of the altcoin market. You know, if you're trading them short term, that's probably just something to always keep an eye on. URG Metals Company. In general, UR Energy, is that the one? Oh yeah, minerals, metals. A lot of these markets are doing really well, based on, you know, the inflationary properties of the market right now. But if we were looking at this one from a chart standpoint, you know, you've got this couple candle high closes at 137. You broke above that. You broke above 157 was your next zone up for resistance. And we're on the daily chart here. If we come back down to the 4-hour chart, you're not overbought yet, but you're getting up there. And if you look here, we sprung. You want to see the back test. If I was taking a position on URG, that's what I would look for. If we're just running a basic fib retracement here, yeah, I would look for a back test at 157, confirm that we got support, and then if it did continue upward, I'd probably be looking up at 199 for this asset. And let me see, hold on. I'd like to see some confluence somewhere else. Yeah, really between 180 and $2 is probably going to be your next target on this one. But again, you want it. It's important that you see anything above 155, 157. That's going to be positive. That is going to probably lead to some higher prices here. Looking at some lower time frames though. Lower time frames, you look good. Nothing that says you're not coming back down to retest 157 though. So if I was taking a new position, that's probably what I'd look for. If I was in it, I would probably I like 155 as a better zone. If it fell back under 155, I'd be nervous about that one, because more than likely you're coming back down where were we on the daily chart? Yeah, you're probably coming back down to 137. You might come back 143, 150. So that's kind of important. Not that zone we were talking about. You know, it acted as resistance a few times. It has been respected more than once. Hash Brown, I agree with you. As far as Bitcoin goes, I do think that's you're gonna get the fake outs, man, in both directions. And I think that's what we're seeing. You know, a lot of people are counting on some further downside. I don't think it's going to happen. I think, judging how much volume came in at $30,000, and it was also respected back in the end of January, couple different double bottoms in the same zone, so much congestion back here, and so much Bitcoin was bought on this dip down by 30,000. I just don't think the market's going to want to let it go any lower than that. But that's an opinion. I just think you're probably going to get a fake out. It's going to make you think that it's going to, you know, retrace further, but technically it's still okay. As long as we don't break below $30,000, I'm not worried about it. You got this zone, buy at the bottom of the zone, you know, sell at the top till we break it. Once you break that zone, to really dive into Bitcoin a little bit further, more than likely, you know, all that money that came out of Bitcoin, that came out of crypto period, didn't leave the market. It's sitting in stable coins. It's sitting in the sidelines, just waiting. And once we've got confirmation, and on the 4 hour, this is what we were talking about yesterday, you're potentially forming bullish divergence on the 4 hour, which hasn't formed since this dump. Other than this initial, you got bullish divergence on that initial drop right here. And then, you know, you don't have much of an edge after that. And that's what traders are looking for. They want to see that on the high time frames. And on the daily's not helping you out. The weekly chart on Bitcoin is not helping you out. You know, especially after this move down. Until you get some kind of confirmation on the higher time frames, you're not going to see that money come back in. But when you do, it's, you know, Bitcoin. It doesn't only move fast on the way down. It moves fast in both directions. It's a lot of money waiting for the confirmation. And until you get it, you probably got a lot of people playing the altcoin moves. Looking at the Bitcoin dominance chart here. Granted, this isn't an asset chart. You can't really look at it the same way as assets, but it does kind of give you an idea what's going on. And if that does not look like a bullish shark to you, if that does not look like a bullish harmonic forming after a major correction to shift momentum to the upside after back testing the spring, everything that you want an asset to look like on a price chart, Bitcoin dominance is giving you. All right. You've got your bullish divergence, implying that the bears have lost control and the bulls are taking over. You've got your major correction. You're buying at a value area. You've got a momentum shifting structure. Your RSI was not only oversold once, but it was oversold twice with a bullish divergence on the RSI and a spring up. This is the Bitcoin dominance chart as compared to the rest of the crypto market. And if you were looking at this chart, if that doesn't scream Bitcoin is about to make some moves to the upside, I don't know what does. You know, looking at stuff like this might help you find an edge when it comes to crypto market. Look at it different ways. This is the total market capitalization of the crypto market here. And the same thing, we've got this, you know, you've got your drawdown, and it's all these charts have the same structure, right? Your massive drawdown, your momentum shifting structure, you got your spring, your back test, and this is, again, the total market capitalization of crypto. And now you've got a potential double bottom here. Not only that, but if you look at your negative momentum is waning. So you've got bullish divergence. After your big markdown, the momentum has shifted to the bullish side. You've come back to back test support, and that implies that you have impending price action continuation to the upside. I mean, I can't really set price targets for this, but you know, the next levels up for this overall crypto market, you're talking, you know, that can't be right, $250 billion to your next major, your next major level here is going to be $250 billion up from where we're at right now. So if you think about that being spread out through the entire crypto market, whether it's Bitcoin, whether it's altcoins, whether it's DOGECOIN, whatever the new hype coin is, you know, that money is waiting. That money is still on the sidelines. We talked about it on the last stream. JG, you are absolutely right, man. That's how the market is. The smart money is buying it while we're all panicking, while everybody else is concerned it's going to zero, it's Bitcoin's over, Bitcoin, you name it. The whole FUD team has come out in the news lately. Every YouTuber, you know, who's got a big following, CNB, everybody's saying the same thing. The negative news, this and that. And, you know, it's somebody who's been through this. I bought my first Bitcoin in 2014. I've seen this stuff every time China bans it 600 times a month. It's just the crypto market, you got to have a little patience. And you got to understand, when you're hyped about an asset going parabolic like Bitcoin did for so long, everyone's rushing to get into it. Well, generally speaking, that's the time you want to scale back a little bit. Once you get that thought going in your head, oh my God, this is too easy, I'm making so much money. You know how people get when they're up substantially on an asset. That's the first indication that you should probably take a little bit off the table. And it's the same thing, you know, on the way down, right? If I'm looking at Bitcoin or any asset on the way down, you know, people, it's going down massively. What's your instinct? I got to sell this. I got to get out. It's the opposite. When you feel like this asset's just going to keep going down, when you know you get the fear because you own an asset that's falling, that's the good time to buy it. And when you get the excitement that an asset's going just extraordinarily high, out of control to the upside, that's usually when you want to take a little bit off the table, because you got to think with the contrarian thought process when it comes to investing in assets, especially, you know, younger assets like Bitcoin that are volatile, because ultimately, you know, if nothing goes up forever, and if you take a little bit of profits off at the top, or, you know, when you're up substantially and you get corrections like this, you're going to look at it a lot different. You're not going to be afraid of the corrections like this, but you need to preserve capital. You need to use stop losses. You need to take profits, and stuff like this. 60% drawdown on an asset that you believe in long term, that is just groundbreaking, earth-shattering news for Bitcoin in the last 6 months to a year. I'm bullish on, you know, the market in general, but Bitcoin especially. Getting a 60% sale on something you're so bullish on is a godsend. It's a blessing. You know, I wouldn't have expected to even retest levels as low as we're at right now on any of these assets. But you know what? Bitcoin gave you another chance. The whole market gave you another chance. If you're a new market participant and you bought at the highs, it doesn't feel great. But the way to take advantage of that is to, you know, dollar cost average if you're stuck in a position like that. And if you want to get out of it, wait for a substantial markup, whether it's going to be something that's, you know, continued for a long time or not. It'll give you an opportunity to get out with less or no loss. You buy the dip, you sell the rip, and you rinse and repeat. That's the way the market goes. But I think I got to everybody's request. If I missed any of them, you guys can hit me up on Twitter at Trade Nomadic. Message me, comment on something. Just, you know, give me a shout. I don't mind looking at charts, and I'll be happy to do it for you guys. And if you want, send me. If you guys got a chart or something you want me to take a look at, man, before the next show, Tuesdays, 7 p.m., send something over. I'll take a look at it. I'm going to bring some of my favorite assets for next week's show. If you guys want to bring yours, we'll kind of have asset battle. And then you got Klein in here who's going to try to short us all. But yeah, I'd be happy to help. Bitcoin tank so I can buy something. So should all you bag holders. If Bitcoin goes lower, I'm just going to buy more. That's my thought process. Bitcoin is a long-term bank account for me. That's the way I look at it. I take the short-term trades too, but I've got Bitcoin I haven't touched and won't touch, and just let it be. I surely think it's going to do better than most other assets long term. But if that's all you guys got, I'm going to call it a night. Again, follow me at Trade Nomadic. We got a Discord group you guys can join. And yeah, like, subscribe, do all that fun stuff. And we're going to get out of here. I appreciate it, guys. Thank you.